Hey everyone, Dan here. We are just before our market close on Wednesday, July 21st. We're going to take an updated look at space. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not in any way, shape, or form investment or trading advice. Do your own due diligence. Put the work in for yourself and make your own decisions based on your own information. All right. So space, I'm sure you're well aware of what's been going on lately, but it's had this pretty immense pushback. And today we're stringing together the third green day in a row. As you see, we're on the daily chart here. Now, a couple of things to keep in mind. The volume is pretty low today, so we're definitely not going to reach the par of 40 million from the average volume for the last 3 months. So we do see volume continuing to decrease. You see it down here, if I can highlight these. And you did see the big sell volume come in. Now, the green buy volume that we've had the last 3 days is also diminishing. So we had nearly 70 million on the 19th, and then on the 20th, that dropped it down to 43 million, and now today we're dropped down to 27. So I would just kind of keep that in mind, that yes, we're getting some green days, but the volume is diminishing. So it does seem to be slowing down to that extent. So just sort of like a word of caution. Now, we want to unpack and take a look at the trend and the indicators, and then I'm going to flip over and we can look at some of the data that could be impacting moves for space. So a couple of things. One, I thought we would take a look at the fib retracement levels to kind of see where we're landing and if we could be landing at kind of impactful areas on the chart that could signal an opportunity for a reversal. So I'm going to take from this first gap up here at low of 1586, and I'm going to give us the move up to 57.51. And let's see where that puts us. I'm going to flip these to yellow. All right, so we seem to be sort of consolidating along the 618 retracement level, which, if the fib is going to hold up and sort of play a factor here, that would make a lot of sense. Also, if you see the supply-demand zones, sort of the buying pressure, it does track back really well from these support and resistance zones that we saw there. And then obviously the next one up would stick us right along the line here, 3481, which would be the next best support level to get to. I don't often pay too much attention to the 50% retracement level, so I would just kind of skip that. I keep forgetting to look at the settings on this Webull app to just remove it from there, but that's what I would look for in terms of its next best opportunity to build support from a previous support and resistance zone, and then get the demand push moving up from there. Now on the indicator side of things, take a quick look here at the MACD. So we do see, because of all of the selling pressure that it's been under since really the 28th of June. I know there were a few green days in there, but even then that was mostly green days just to hold it relatively sideways. But on the daily, MACD now has come down underneath the baseline. So these are actually good indications to me that we could be seeing more buying pressure coming in. But what we're going to want to see happen is this MACD continue to consolidate along the baseline here, the rest of this bearish momentum to die down, the histogram itself to dwindle like you saw here as it was ramping up, and then have a nice bullish crossover with the MACD crossing over the signal line, indicating that we have completed that reversal. But again, the big thing here to me, you see this blue line here curling down because the volume is dropping, and it is buy volume that's dropping. So I would keep a strong eye on that. We see what happened here as the selling volume dropped down. We then flipped to buying volume. And so my concern there would be that could certainly happen again. Let's take a look at the RSI. So the RSI is making its first approach, if we can continue to have another green day or two, at the midline. To me, the midline is going to be sort of a very important telling piece of the puzzle here. Let me zoom out a little bit and just kind of see in the broader scheme of things the past midline move. So you see, like back here, for example, when space was coming down from overbought territory, watching it consolidate here and hold the midline would have given you a really good indication that there's much more buying strength here. There's more buying pressure to be had, and thus thrusting it up over overbought again. Now on the way down from this overbought, you see here it tried very briefly to hold the midline, but it then pretty steeply fell through that, and that then pushed it into nearly oversold territory. It came back up and it couldn't even reach the midline here, and it started moving sideways, and that pushed it back down into oversold, and again barely got out of oversold before it came back in. So now that it's sort of made its way through the overboughts, and my big question here is, like, was this the most recent low, this 39.05 on the RSI, or is there more to go and it's just going to have like a failed attempt up here? That'll be kind of the question, but definitely some like reasons to be cautious, with this, in my opinion. But you do see how strong that 3481 zone is. If it can get support, that should be really strong support. You see support and resistance here. You see the resistance here, support there, support and resistance there, and resistance there. So really strong zones stretching back quite a ways, stretching back into last year at least. So we're paying pretty solid attention to that. Now on the MAs, we do see the 20 curling down in sort of like making a bearish move, but that could certainly flatten out and remain where it is. Overall, in the longer term scheme of things, space still barely in an uptrend, but it is in an uptrend. It basically, the 200 swooped in to provide additional support here. So it would be another good thing to keep an eye on. It's butting its head up against the 50 MA right now, treating that as resistance, and if it can flip that to support, that'll certainly give it the lift that it needs to get over that 3481 area, and then we could make an attempt at the 20 and get support there as well. I just wanted to look back and see sort of some previous examples of this. We see it here, kind of caught the support of the 200. Now at that point, the 50 was right along there with it, and we saw obviously this big move up. We did see catch support on the 50 here before, so we do have some examples. Caught support on the 200 there, and tried to catch support on the 200 there again. So it does seem to do this quite frequently, with some level of consistency. So it could be a good indication that support, if it can hold it over that 200, will then obviously lead it into support over the 50, and historically developing those support zones for the first time have led to pretty solid liftoff. So knowing that we're in a solid retracement period, what if that were to happen? I wonder, maybe we check out some levels that we might get for an extension if we were to run a little bit. So if I look at the most recent impulsive move up, basically really kicked off here, right? With this big gap up. So we take you from here, and then it stalled out at 57.51, and then has drawn down, if this holds, down to this 28.63 level. This would give us retracement levels to the upside here. Now what I look for in an actual next wave up is for it to retrace back to to extend, these are extension levels, to extend back to the 100% level. That said, there's obviously a bunch of areas here that would push us toward 40, but I'd really be looking for that 46.81 level if we are actually going to have a wave up. And then I would essentially look to trim position there, take some profit off the table, lock it in, and then would sort of try to ride my next ones into this 58.04 target to the upside. And if I'm feeling really spicy, I would look for then 200% retracement extension level to the upside. It's been a very tiring week, everyone. I'm sorry for the words that come hard as the week goes on. It's only Wednesday or something, right? But yeah, that's what I would look for. Those are sort of like some of the cautionary measures that I would look to flip, the RSI approaching the 50, the MA 50 being resistance right now, and then certainly the MACD needs to roll over, and for me to feel comfortable jumping in and sort of trusting this, these three green candlesticks here. Also, like I said, the volume to me would really need to kick up in order to feel like the buying pressure is truly there. Now, on the data side of things, obviously what plays a factor in space quite frequently is the short interest. And we see today short interest jumped up a little over 18%. So a couple of things happen. Oftentimes shorts sort of pile on when there's an organic sell-off happening, and they just use that to really sort of try to crush the price down. Then they also tend to jump in at the first signs of a recovery or a potential trend reversal, because if they can squash this early on, folks will really quickly lose any sort of hope that they have that there is a trend reversal happening, and that will just sort of like kill the spirit of the buyers. And so I think that that's probably why they're jumping in today, because they also see a bunch of opportunity for downside here. I mean, you look, this was trading in the 14s just a few months ago. So definitely, could feel, just looking at this chart, overextended. Now, I don't necessarily think that that's the case, but I understand how it could look and feel that way. So shorts jumping in. Now, that big jump up pushed the short interest percentage of the free floats over 16%. Now, I know that that sounds low by today's standards when you see things in the 30s and 40s and even higher. But historically speaking, anything over 10%, I have considered very high short interest. Anything over 20% was really eyebrow raising, like, whoa, the short interest here is pretty extended. And so 16, approaching the 20 mark and definitely well over that 10 threshold. So this is still significant in my opinion. Also, the current utilization is less than 50%, so there's plenty of availability out there if shorts wanted to pile in harder and heavier and really kind of attack the stock. There's plenty of shares for them to borrow. And a pretty low borrow cost right now. Looks like 1.4%, having decreased from last week. The other thing to sort of keep in mind here is, on tip ranks, here we have the consensus of these 11 analyst ratings. And look at the analyst ratings just for the impact that they may have on institutions and or retail traders that see, potential for 10 to 11% upside based on analyst price targets. This isn't necessarily because I think that the analysts are right, but just rather the framework that they provide some folks who might blindly follow them as jumping into or staying away from stocks. So 4 buys, 6 holds, 1 sell. That said, even with that spread not being super bullish, 10 to 11% upside, pinning the price at 36.90. So that could also bring some additional interest and pressure in. We'll have to see in the days ahead. But that's what I'm really looking for from space. Good luck if you're in this one. I definitely hope your trading week is going well, and I appreciate you watching this video. I will see you in the next one.